And most importantly, do not forget, okay, www.streamyard.com/Facebook. All right, because the first comment I have today, hi everyone, all right, and Facebook user. Okay, now, so it will help us because we're using a backend software to do this stream on Facebook. Okay, now, so it'll be great for us to know who's watching us, who's with us, right, and address you in a more personal manner, right? And in order to do that, okay, I will need you to see the banner on the screen. Okay, you can type out the link, which is streamyard.com/Facebook, right? And that will bring you to a separate pop-up box. Okay, and from there, okay, you will be able to see a Facebook button in blue, right? Just click on it and you'll be fine. Okay, now, so it's just a one-time thing. Okay, the next time you join us again, it should be working fine. Yeah. All right. Chunhao, all right. I hope I got your name right. Okay, Chunhao, hi. Thank you for joining me. City Chai, thank you. All right, Irene, okay, and a second Facebook user. Okay, now, so once again, if you can, okay, just click on the StreamYard link, okay, when you join us, so we'll be able to address you, yeah? All right, hi, Alun. Okay, great. Once again, to have all of you here join me on Fridays. And without further ado, let's get started, yeah? Right now, more and more people will stream in, okay, but please remember, okay, that the hot and fresh giveaway is still going on, okay? The hot and fresh giveaway is still going on. And in order to qualify for a number, in order to qualify for an entry today, okay, now all you need to do, okay, is to make sure, okay, that you click on the like button on our Facebook public group, okay, where this video is being shared Facebook Live, okay, click on the like button and then click on share it, okay, but more importantly, okay, do not share it to any other groups out there, okay, do not share it with, a specific group itself. It has to be shared as a public. All right, now, so if you're not assigned a number in any of the previous sessions, right, that's simply because, all right, you didn't share it as a public. Yeah, okay, please understand this. Okay, so my team will check through the share buttons, right, and then after that, take note of your names, okay, and assign you a number. Yeah, all right, now, so we have about 3 more weeks to go. Yeah, all right, 3 more weeks to go before we close this draw. Right, so all you have to do is to click on the like button to this Facebook live session. Okay, and then after that, just remember to click on share it. Okay, and when you click on the Facebook share it button, there's a public, right, on the first one in the drop menu. Okay, just make sure you do that. Okay, all right, now, so thank you very much. And what's going to happen is once you have done that, all of you will be assigned a draw number. Okay, so the more times you attend our Friday sessions, right, the more opportunities you get in terms of being one of those winning numbers over here. Okay, now, so do remember you also have to click the like button. Yeah, okay, all right, now to qualify as an entry. Yeah, okay, now, so what's the prize? Okay, the hot and fresh giveaway, right, on the 16th of September. All right, the next session after that. Okay, we're going to run a draw, okay, where we're going to choose 3 lucky numbers. Okay, where all of you, the 3 of you, all right, will be given a free slot at our Q4, right, 2021 24-hour earning season. Okay, all right, now that's the final earning season for 2021. All right, each of these slots are worth $397. Okay, the price will be raised in 2022. All right, now, so that's what's in store. All right, we are giving away 3 free slots over here. Yeah, okay, so do not waste the opportunity. You are joining me right now. Just hit on the share it public, all right, and the like buttons. Okay, now, so I'm done with that over here, and let's go. Okay, let's discuss the markets, everyone. Okay, now this week, I remember to remove the banner. All right, I'm not going to get scolded this week. Okay, now, so as a disclaimer, before I start anything, okay, I will be sharing my thoughts about the markets. I will be sharing my suggestions of trades that I'll be placing in this public portfolio. But please be aware, anything that I do over here in this session with the public in general, right, is for educational purposes only, right? So do your own risk assessments, do your own risk judgments, be aware of all the risks involved, all right, and the allocations to every trade that I'm taking out and doing in this session before deciding if you're going to follow the trades or not. Okay, all right, now, so this is on you, right? You have to be comfortable with every investment you make before you actually do so. That's a very, very important element over here. But if you do want to learn how you can, be more effective, right, and be trained as an option seller, okay, and achieve much higher returns, right, you can consider one of our mentorship programs out there, right? 24R is one of those programs, right? Another one is a trading membership that we run all year round. Okay, now in this membership, all of you will be able to trade with me and my trading team at least twice a week right now. Yeah, okay, so we run over 100 live webinars, okay, with our members, okay, and we trade with them every single session. Yeah, okay, so imagine the value over here and the ownership that we take over here. Yeah, all right, now, so let's get going. That's all I'm going to say. Now, so what is the market doing? The market has hit a new high yesterday, right? Yes, we have a new high, okay, but what has volume done? Look, everyone, right? What is volume continuing to do over here, right? It is just waning and waning and waning. Yeah, all right. The volume is not improving. Now, so what does this tell you? Right? It tells you that this ball that is being pushed up the cliff, right? It's getting fatigued. Right? So while many of you see that we are hitting new highs, okay, but it's actually fraught with what we call a lot of dangers right now. Yeah, okay, it's fraught with a lot of dangers if you actually think and consider about chasing this market. Right? Now, another thing you want to take note of. Okay, now I know I should not be saying this, right? Okay, but I really, really want to educate and bring to your attention all the possible risks as much as I can, okay, in these public sessions. Right now, there is, that ratio that you can look at when you compare growth stocks versus value stocks. Okay, now the last time it hit a high of about 1.6 times. Okay, that means the movements of the growth versus value stocks, right? When the discrepancy is 1.6 times, that was when the year 2000 was happening, right? What did year 2000 bring? It was the redhot.com era. All right, now, so at the end of it, all right, we hit about 1.6, 1.8 times over here, right, before the market came crumbling. And we all know, okay, those of you who were around in the year 2000, right, how fast, how swift, right, the NASDAQ, yes, right, I wanted to say QQQ, but some of you may not know that, okay, the NASDAQ fell, right, and this can be something that's being set up right now because this entire market, this entire bull run reached this froth simply because of another IT wave, right, so it's pretty much 2000, right, all over again. Okay, but only this time there's a little bit more fundamentals behind, right, the IT bubble over here, right? So we can't really call it a bubble, yeah, okay, but it definitely needs a correction, right? So if you're going in right now in the markets and you're going with long positions, you're bullish, right? Be very careful. That's all I would say over here. Now, what are you doing then, Terence? All right, you're building a portfolio and making money, right, with the stocks. Yes, I am, right? But you have to pay close attention to how I'm doing this because I've been doing this for more than 10 years now. Right. So there will always be stocks, right, where if you know what to look for, right, they will move in the opposite direction of the market itself. Yeah, I just gave you a hint back there, right? Growth versus value. There's a discrepancy right now. Growth is skyrocketing, right? But value is being ignored. Right. So when the flip side happens, what do you think is going to happen? Right. Yes. Okay, now that's the hint I'm going to drop over here. I'm not going to make it too obvious, yeah? All right, how many of you got the hint? If you got the hint over here, type got it. All right, if you got the hint, type got it. Okay, I got it. All right, now. Okay, now, so that's the markets over here. So let's move to our portfolio as usual, yeah? All right, so let's go into our portfolio. The first stock I want to relook at today is VZ, yeah? All right, so let's look at VZ. What has VZ done for us a week from now? All right, yes, we had a rebound on VZ over here. All right, in fact, this week we did see a little bit of rebound in terms of value stocks, okay, with the entire marketplace. So we have VZ rebounding over here, right? So if I'm not wrong, we do have a September 17, 57, right? 50 puts, I would believe. All right, so today it's about 220. All right, let's check. Yes, I have a 57.50. Look, we are back in the profits. Barely, all right, but we're back in the profits. Now, of course, I'm not going to close this position. I'm absolutely comfortable with it. So I'm just going to stay on, all right? I'm going to hang on to it. All right, now, next one up, right, GIS. Okay, now, so what are we on GIS right now? We have a September 17, 60 puts as well. All right, now, so let's have a look. We are, underwater on this one, all right, but I'm perfectly fine. Yeah, all right, now, so the premiums right now sits at about 240, 245, okay, but we still have another 2 more weeks before this option expires, right? And there is a very good chance if we get a market correction, right, that we will see this stock, right, shoot back above 60 over here. All right, look, there was a swift collapse, all right, over here, all right, but it can go back up very swiftly as, as it came off. Now, what do I mean? Because this stock, all right, if you really look at it in detail over here. I'm trying to get a drawing tool, yeah? Yeah, okay. All right, it's pretty much just trading in this range right now. Okay, the high of the range is about 61, all right, and then the low of the range is about 57, all right? So that's where this stock right now is being boxed up, yeah? Okay, so as long as it stays within this range, there's no real trend on either side of things. Okay, now, so I'm hanging on with this stock over here, and, okay, if anything happens, I'm more than happy to pick up the stocks as well, yeah? Okay. All right, now looks like not many of you got my hint over here. All right, okay, now, so nobody is leaving a comment. Oh my goodness, nobody got the hint. You guys might need to turn up more often, yeah? Okay, now next one up. What's the next stock? CAH. Now, I can't make it too obvious in every one of my sessions, yeah? All right, learn to pick up my drips and drabs over here. Okay, now, so CAH, we have a 17 September 50 puts, right? So let's have a look at this one. This one, okay, I'm going to take off the table, right? Why? We collected 112, right, for this trade, okay? And definitely right now, okay, I can pay, right, about 15 cents to get this close. The last done is 15 cents. And if I buy it back right now, that's the market price as well. All right, so let's go ahead and do that. We'll pay 15 cents, all right, and get this trade closed. Now, why? Right, actually, there's a simple reason. I want to free up some capital in my portfolio, right, to take on a new trade today. Yeah, all right. Anyway, there's 15 cents premiums left. Right, if I close this, right, I will free up $15,000, right, to take on new stocks and new put options. Yeah, okay, now for those of you who are joining me for the first time, right, first, I'd like to thank your friend who has probably shared this session with you, right, to bring you here. Right, now in this public session, what I do is I show you how to build a portfolio in a very simple manner in under half an hour, right, a week. Yeah, in fact, yes, that's all we take over here, less than half an hour a week to finding a stock and placing that 1 or 2 trades, every week over here. That's all it takes. Right, and we actually clocked a 17% return in our first year, right, doing this Facebook live sessions. Yeah, okay, now if we didn't even trade all 52 weeks, that's an amazing thing, right? Yet we still made a 17% return, all cash, right? There's no leverage on this portfolio, right? There's nothing that I take out on loans at all, right? It's just a pure cash portfolio worth $100,000, right, that I built from day one, right, and entered real trades, right, with our participants who are joining us, right, every single week, free on Facebook over here. We are now running into year 2, right, and we're doing the same thing, but looking to improve the performance, right, a little bit better. Yeah, okay. All right, now, so what we do, our adopted strategy is called selling portfolio puts. What is it? It's essentially a naked put, right, but we have the full cash required to actually buy the shares if it is forced onto us. Yeah, okay. All right, now, so that's the deal over here. Now, so I'm going to pay 15 cents and close the CAH, right? That's what I'm doing over here. So that's going to pay me $291 in cash flow, right? Once this trade is closed, we're closing it today, right? And it is the 3rd of September, yeah? All right, now, so this is going to free up my margin. It's back to 0, right? So my account, which is about 117,000 right now, okay, the capital use, right, is back down to 93,000. Right, so we have got about 24,000 that we can use up today. All right, so let's see what we've got. Okay, now before we go any further, let's look at Rio. All right, so Rio is another trade where we went underwater. Okay, where is it sitting today? Another profitable trade. Yay! Our first one for year 2. Right, our first one for year 2. Yay! All right, we're off to a start. All right, now, so let's go to Rio. Right, so for Rio, we did a 17 September as well, 77.22. Right, this had a funny strike price because there was some bonus issues or there was some special dividend that was being paid out. Yeah, right now, so this put option today is worth about, I would say, in the middle, 215 if we want to close it. Right, so 215 if we want to close it. So we are slightly underwater. Right, but we've still got time, so I'm more than happy to hold on to this stock. Okay, now next one, HIMX. All right, so HIMX was also another stock, right, that was an immediate loser out of the gates. Okay, but I think it's rebounded, so we should do pretty well right now. Okay, now so let's have a look. We sold this put option for about close to 120, right? Okay, 120. Okay, today, right? The stock is back above 12, okay, and our premiums is about 80 cents, I would say. All right, so we do have a slight profit on it, okay, but no way am I going to close this and take anything today. Okay, no way. All right, so we're keeping this position. Now, CL, Colgate-Palmolive was the last trade that we entered last week. All right, so let's see what it's done since then. All right, we know that it's gone up by a little bit from last Friday's session. We sold the 15th October, all right, for about 160. All right, we have a slight profit today, all right, sitting at about 130. Okay, the highlighted ones in blue over here, right? 15 October, 77.50. All right, so it's about 130 to close this trade. We have about 30 cents profit in 1 week, right? Hey, that ain't too bad over here, right? That ain't too bad. Okay, now, so let's go now into the stock, right? That I want to do this, yeah? All right, Facebook user. Thank you very much. Okay, but before I go further and congratulate you, okay, I need to make you aware, okay, that if you are taking 10 contracts, okay, on the guidelines over here, you've got to allocate $77,500 to be willing to buy up those shares, okay, if you're following the portfolio that I'm building strictly over here. All right, so I just need you to be aware of the risk, okay, in terms of the size you're trading. All right, so congratulations. Thank you very much for letting me know. That's really awesome. All right, now, Andy, it is you. What happened to you? All right, you were recognized on our system. All right, what happened? What happened, Andy? Okay, all right, no idea why. Okay, but if you go to streamyard.com, okay, /Facebook, all right, and just approve it one more time, okay, I can see who you are, yeah, all right. But thank you for letting me know, Andy. All right, great trade over here. Now I know you can afford it. All right, you can afford it, yeah. All right, so I'm not worried about you then. You know exactly what you're doing. All right, congratulations. Okay, awesome trade over there. Okay, now, so let's get go. So you close CL, but I'm staying put in it. Okay, so today I'm going to add a new trade, everyone. All right, so what am I going to do? I'm going defensive. All right, I'm still going defense. Now is the time to play defense in this market. All right, so how am I going to play defense right now? Okay, anybody wants to make a guess? All right, now, so today I'm going to play defense. Okay, no, actually StreamYard doesn't have a problem, but what they do is they do update their back end every now and then. Okay, now whenever they update their back end, all right, you will probably need to reapprove Facebook once again. So it's a process where you probably have to do it every couple of times, yeah? Okay, all right, now, Jackson, all right, I can't comment because if you're talking about stock, LCID, I'll probably say it's lucid, I'm not too sure. Okay, but the key is this, right? I do not touch stocks that I'm not familiar with. Okay, there is a very specific guideline that we follow in terms of the stock selections here, all right? And I do drop nuggets in terms of how you keep yourself safe, right? And just think of it this way, right? If you are trading a stock where you're expecting big gains from it, right? That means you have to be prepared for big losses as well, right? Now, why did we take a trade on Colgate? For very simple reasons. It's boring, all right? I'm sure you admit it's boring. Okay, but okay, if people like myself and Andy over here could have made some good gains, right, within 1 week, that's enough, right? We just need to keep finding these type of trades over and over again, and that's good. Why? Because it allows us to sleep well at night. We entered the stock when it's already cheap. Yeah. Okay. So how bad can it be? Yeah. Okay. I hope you see where's the gist over here, right? This is a public session. I want to show you how you can build very, very safe portfolios, right, that still pays us 17%, right, in our first year together, right, using all cash, right? There was no leverage, right? So imagine if you turn up, right, and know, right, how to sell, okay, with much lower requirements, yeah, okay? That's why I teach in my mentorships over here, right? How do you do exactly the same type of trades, right, making money from the same outcomes, right, but lowering your capital needs, right? So hence, right, the obvious outcome is a better return. Yeah, okay, so Jackson, right, I won't be able to comment on LCID over here. Yeah, okay, because I don't know. All right, and I'll tell you very honestly, I don't know because I don't study these stocks. I'm not a fundamentalist, okay, or not in that way, okay? I'm not a fundamentalist who will go out there and calculate the ratios, right? I'm not a Buffettologist. I guess that's the right way. Yeah, okay, now I take very simple stocks, okay, where I can look at one simple number. All I do is I look at one fundamental metric. All right, and it gives me the confidence to get in on a trade. Yeah, okay, and that's how I teach my students as well, right? And they find it really, really simple. And that's what we've been doing for the last 10 years, right? We've been doing that for the last 10 years and it's still working. Yeah, it still works, all right? So don't break the wheel, whatever works, just keep spinning it, yeah? All right, now, and Andy, is it still you? Is it still you, Andy? All right, can you leave a second comment? I just want to confirm that. All right, is it you that said CPB, Andy? All right, Eka, I will leave that to you to make your call over here, yeah? All right, now, because these are public sessions, all right? So once again, let me remind you, all right, for public sessions, I would enter a trade, okay, because I'm coming to the stock from an investment perspective, all right? So an investment perspective and a trading perspective is totally different. Right now, Eka, I believe you have joined us in the trading membership as well. Right, so do come to our Monday sessions, all right, where I trade live together with all of you, right, and you'll find out, okay, if I'm going to execute and take a new trade on CPB or not. Yeah, okay, all right, now, so it's totally different, yeah, all right. So Andy, it's you, all right, congratulations, you can read my mind. All right, well done, all right, Andy, all right, and yes, today I'm going for Campbell soup, everyone. Okay, now, so we are going to go into Campbell soup. Why? For a very simple reason. It's dipped, right? It's dipped, okay, but earnings is out, right? Earnings is out, all right? So that's out of the way, and it ain't too bad. Can all of you see? They estimated 47.4 cents, right? But the company announced a 55 cents, right? Now, so it caused the stock to gap a little bit higher. It closed this gap over here, right? And now we may see the stock start running up, right? Now, and with a stock, okay, that's as boring as Campbell soup. Yes, as boring as Campbell soup. Right, but it trades at 13 PE, everyone. Right, going back to the argument that I said just now. All right, growth versus value. All right, would you say this is a value stock, right, that has been pressed and pressed like a spring, ready to bounce? All right, I don't know about you, but it tells me that, hey, on the odd side, this seems pretty much like it. If the market collapses, where are risk money going to go? They're going to go into safe stocks, right? What kind of safe stocks? The non-expensive safe stocks. Doesn't it make sense? Right? Okay, now, so they want stocks with very little downside, at least to park their money until things look similar, right? Until things look safe. All right, okay, now, so Campbell soup is my choice today, and I'm going for 15 October, right? 43 puts over here. I'm going to collect 125 for this, right? So I'm going to place an order for 125, all right? Andy, now I know who's the ones that jumping my gun. Who's the ones that... You just gave yourself away, Andy. Now I know who's the culprit. So I've got to... I wanted to say I've got to beat you to it, but it looks like you beat me to it, Andy. All right, now, so I'm going to put back the usual 3 contracts over here. All right, it looks like 125 can be taken. All right, so let's see if I can get mine done too, yeah? All right. Okay, so I'm in at 125, but it doesn't seem to bite. Okay, but I believe Andy has already gotten his done. All right, so Andy would have gotten the 125. Okay, now, but let's have a look, yeah? All right, I'm going to leave it for a while and sit for a while at 125. Okay, while we go ahead and do the calculations for this trade, yeah? All right, now, so let's go ahead and do the calculations for this trade. This would be trade 67. All right, now, and I'm going for 3. Yeah. Okay, this would be Campbell soup. Portfolio puts, $43. We're entering on 3rd of September. All right, and I'm trying to collect 125. All right, now, so this would tie out about $12,900, right? Just in case that I have to buy 300 shares of Campbell soup at $43 each. Yeah? Right, so that's why it comes up to 12,900. All right, now, having said that, let's go calculate our returns, okay? Now, so I'm looking to make about 125 on an investment of $43 per share, yeah? Right now, so if that trade works out, it's a 2.91% return, okay? 2.91% return in the course of 42 days, right? Now, if I'm not wrong, 42 days is a span of 6 weeks, right? Correct me if I'm wrong, yeah? Right, but it's a span of 6 weeks over here. Now, so all I'm going to do is I'm going to divide this by 6 weeks. Oh, no. Am I wrong? 7 times 7 is 49. So yes, I'm right? Now, 6 weeks. Now, so I'm going to divide this by 6 and then reanalyze it. Okay, now this will bring my annualized return to about 25%, right? And this is a simple one, right? A stock with a low PE, a stock that pays dividends, a stock that is profitable, right? And then an option trade that pays me 25% per annum if I can repeat this similar trade over and over again in the marketplace, right? Now, so this is a no-brainer over here, right? And I'll go ahead and do this anytime. Okay, but it seems like it's not going to bite me, right? And some of you have already jumped the gun, right, and lowered your prices on me. Right now, so let's see if I can get something done over here. Right now, so I went ahead and get something done. Right, so I'm filled over here. Right, and let me show all of you so you can verify that. Okay, everyone, I sold CPB, right, 43 puts over here. Right, I sold 3 of them, right, at 120. Okay, right, so I brought it down just to get into that position. Right, so I'm in 3 contracts right now at 120. Okay, now, so this is a filled trade over here. I've sold it, right, at a time of 21:56, which you see on the platform clock, right? That is the time right now. Yeah, okay, now, so that is a filled trade and it's locked down as well. Okay, but we do have to adjust the calculations a little bit. Right now, so it's 120. Right, so it should be this divided by this. Right, voila. Okay, 2.79, but 24.19, that's still pretty decent. I'm happy with that. Okay, now, so we're done. All right, and adding this position would add on and tag on a 12,900 portfolio, all right, in terms of investments. Now, so my portfolio is back to 105,000 right now. Okay, so I'm about 90% invested, right, whether you believe it or not. Okay, so, you know, contrary to what many professionals will tell you, hey, this is the time to keep cash, right? Okay, I always believe this. If you can find great investments, right, if you know what you're doing, right, cash is always better served, right, as invested. Yeah, okay, invested. Right now, so of course, you have to be very careful in terms of how you select, okay, and how you do things, okay, because you can see, right, that in my portfolio right now, 1, 2, 3, 4, 5 trades over here that we have on, right, that we're slapping on, right, it's pretty much value. All right, okay, value. All right, and it's not just any Tom, Dick, and Harry kind of value, right? It is, you know, how do we say this? It is, how do I say this right? Okay, it is defensive. Yes, I want to use that word. It's defensive value over here. Right now, hey, I forgot about this. Okay, now, with what's happening in China right now, okay, I'm going to choose to take a profit on my JD long-term trade, yeah? Right, I went through the full swing on JD right now. I do have a great bounce. Okay, I'm going to take my profits off the table. Now, so in my portfolio, we did have a JD 21st January 2022, 77.50 puts. We sold it earlier in April, all right, and we collected $9.35 for it. Right now, so let's go ahead and look at this trade. Okay, I want to close it up today. Yeah, okay, now I want to close it up because there's just too much uncertainty, all right, with what's going on in China. Right, and we enjoyed a great run up. Right, so I'm going to take advantage of it right now at this moment. Right, so 77.50. All right, I can close it for about $7 today. Yes, it's 77.50. Right, so let me go ahead and try to get this close. Right, for about $7. Let's see if the market bites me. Yeah, all right. All right, now the market bite me over here. All right, I've decided to edge it up a little bit to 705. All right, I've got my trade close. Yeah. All right, now I've got my trade close over here for 705. All right, it's all done. It's all wrapped up. Hang on. Okay, everyone. Right, my JD trade over here. Right, 77.50 puts. Right, we closed it over here. I bought it back for 705. All right, 705. Okay, now. So let me fill up this order over here, JD, right? 705, it's out. Okay, now, so that paid me $460 in cash flow, right? And it frees up, right? 15,500 on my capital, right? Awesome, right? Now, so I closed it up in 3rd of September as well. Okay, now that's another winning trade. Awesome. hey, we ain't too bad over here. Now, if you look at the entire season, right, so far after 1 year, right, we had no rates. If you see no rates, it simply means that we have not clocked a losing trade yet. Okay, but we had to deal with 2 assignments over here, right? Our first one on Nokia, right, where we sold the portfolio put, we were assigned the stocks, right, and then we turned the entire trade profitable after that. Yeah, okay, that's why it's locked down in green. Right, our second assignment happened on Consolidated Edison. Here we go. All right, we sold the portfolio puts, right, and then we were assigned the shares. Okay, we sold calls on it, all right, and we turned the trade profitable. Right, so the only two stocks we were assigned, right, but we did like what 67 trades, right, and 2 stocks assigned, and we turned it profitable. Yeah, can you see what we've done over here? Right, in an entire market, there's been already very high and stretched when we started, all right, sometime in, when did we start? Yes, August 2020. Yeah, all right now. So, that's what the market is. We just work along with it, all right, and we find the trades that we want. Yeah, okay, now, and 67 trades. We have 1, 2, 3, 4, 5, 6 still open, right? That means with 1 VIX as a portfolio hedge over here. So we have 60 winners, right? 60 winners, all right, so far. Right, and I'm happy with that. Okay, I'm not sure how many of you will be satisfied with such a trading record. Okay, because that puts us at, with 6 positions or 7 positions open. Right, we're literally almost, right, I don't want to say this, we're literally almost 99% home, right, in terms of profitable trades. Yeah, okay, and I didn't fudge this. I did this live, all right, in front of the very eyes of all of you. All right, so I just want you to see, all right, what you can do with great stocks, okay, if you know the art of option selling and you know what to look for, you know what to do, right now. So that's all I want to cover in this session today, right? But as usual, what I'm going to do is I'm going to leave time, okay, for all of you to ask and pop 1 or 2 questions in your comments over here, all right? Once again, if you join us late and you have not done so, all right, okay, you have not done so over here, right? Please click on the like, right, and the share to public button, right, to qualify for a hot and fresh giveaway, right? Now, because to qualify for this, right, you will need to do it by attending one of our Facebook live sessions when it is live as well, right? So any of you who does it after the session, it doesn't qualify as a qualified entry too, right? You have to join us live on Friday, all right, and actually do the like and share it to public, yeah, okay? So that will give you a valid entry over here, right? Thank you very much, Mei Ling. All right, thank you very much for letting me know. All right, I'm equally happy, all right, to sharing and running these sessions, all right, when I can, as much as possible on Fridays with all of you. All right, it's really, really awesome. Yeah. Okay. Now you've been great, people who have been joining me every single week. Jimmy, all right, whatever works. Okay, Jimmy, from a very common sense, basic terms over here, right? If you let's look at it from a business deal. Okay, if you know that you have a great customer, right, and the price is also great. Right? How long do you want to lock down that customer? Yeah, okay. So it's pretty much a time versus return comparison. Okay, maybe I can take a good example, all right, from today's choices over here. All right, now let me bring up. Oh, hi Facebook user. All right, unfortunately I can't see who you are, all right, but thank you for joining me in the nick of time. In the nick of time before we end. Okay, but I'm going to answer Jimmy's question with today's trade over here. All right, Jimmy. Now, Jimmy, help me out. Okay, first, when I chose this stock today, all right, which is CPB, all right, what was the rationale behind choosing CPB? All right, what kind of a situation was this stock already in? All right, thank you, Engwu. All right, yes, thank you very much, Jimmy. All right, now I know there's a little bit of lag over here, but I'm going to make up for lost time. All right, now, so first, all right, we said CPB is a stock, all right, that's a value stock, it's profitable, it pays decent dividends, which is 3.43% right now, and it has a very low PE, all right, which is actually cheaper than the market. Yeah, okay, which is cheaper than the market right now. So the deal is this: you have a profitable company, all right, at a PE valuation, right? And you can use PE because it's not a growth stock, right? It's a simple value stock, or what we can do as calling it as a big blue chip, yeah, okay, that pays dividend, right? So PE is actually a viable valuation methodology. Yeah, okay, so we keep it simple, right? So this is considered a low PE, so the stock is cheap. Now, so when a stock or a good stock is actually cheap, right? Where is the expectation now? Is the expectation higher for it to rebound, or is it higher for it to continue crashing? Right, Jimmy? Right, I hope you say, right, that the probability is on the upside. Yeah, okay, so we're leaning on the upside rebound right now. So knowing that, okay, knowing that you have the edge, all right, the higher probability on the stock going up. So you realize that you don't really need to give it too much time. Yeah, okay, why? Because I could have chosen the 15 October, right? The 43 puts would have paid me $1.20. Now, let's take $1.20. Okay, $1.20. Now, but if you choose a further month ahead, let's take 19 November. How much can you get? 165, 170. So that's like just an additional 50 cents, right? For another, right? 50 cents for another 4 weeks. Can you get what I mean? Yeah, right. Now, so does it make like a good business deal over here? Right? Because in that 4 weeks that you save, right, could you have redeployed your capital, right, to make a better return than this 50 cents? That's what I would think about. That's how I think and look at the trade. Right? I just give it what's enough. Right? But of course, I may not be right all the time. Yeah, okay, I won't be right all the time. But if I don't see a lot of downside in that stock that I'm entering right now, okay, I will usually choose an expiry that is in 1 or 2 months time frame, right? Okay, but if I'm not very sure, okay, then I will try to give it more time, right? Just in case it needs to dip before it rebounds again. Just like what I did with JD. Because when I entered JD, I realized, hey, the stock is cheap fundamentally, right? But I don't know what China is capable of, right? So I decided, hey, I'm going to sell something long so that I give it time. Yeah, okay, and the returns were pretty decent as well. So it was okay to take that deal, right? And hence, today, by closing that trade, I was proven right then. Okay, why? Because I didn't need to buy that stock. Yeah, okay, I could just stay in the option trade, nothing would have happened. And today, I could have closed it for a profit. Yeah, okay, so there's no real right or wrong answer over here, right? But it comes with experience and it comes with mileage where you clock it, right? So, you know, like any technical trader will tell you, right? If a specific set of indicators work, right, then it's the mileage, it's the practice. Yeah, okay, the more practice makes it more perfect, right? So option selling is pretty much the same. Yeah, we look at less technicals, right? We look at less fundamentals over here, right? Because we have the edge and probability of success, right? But okay, you just need to know what you're doing. Yeah. Okay. All right. Now, there's no minimum time frame actually. All right. In fact, you know, we do cover all these technical details, right, in our mentorship programs. So if this piques your interest over here, right, then, you know, really come in and join us in one of our different mentorship programs. Right. I believe you are in with us on 24R. Okay. Once you're done with 24R, okay, then, okay, you can explore and see if you are interested, right, to take it up a notch, right, in the portfolio level. Yeah. Okay. All right. Now, no worries, Jimmy. All right. Now, Jackson, if the market did, Ryan, let me answer Jackson's question and then I'll take yours as the last one for this session, okay? Now, so Jackson, your question is if the market did a correction, right, you need to buy all the open trades. That is how I've built this portfolio, right? Because, all right, I'm taking all of you as public, right? I know many of you are joining me as members of our community, right? But I'm treating everyone as a public over here. So I'm treating all of you as though, right, you have never done option selling before, right? So the safest way to doing this, right, is what we call the portfolio puts, right? It's just, you know, a direct swap, right? If you bought the share, okay, you would have come up with the full amount, right? But I chose to come up with the full amount, but selling options instead, right? What's the benefit? The benefit is this. I don't need the stock to go up for me to make money out of that trade, right? Many of you saw this before, right? There are stocks that are below our strike prices, but we still ended up making money. Why? Because of the time value, right? And that's what I wanted, right? Because I matched up the methodology with the stocks that I'm trading, right? It has to match up, right? Just like, you know, when people buy insurance policies, it has to match up with what the person needs. Yeah. Okay. So if I decided that my strategy to make money in this session that I'm doing with all of you is portfolio puts, then I need to pick the right stocks so that it's going to work with great success, right? But, you know, the outliers where everything goes wrong, then I would have the capital to allocate, so I'll never run out of money, right? Money is the biggest problem. As long as you don't run out of money, you're never ever going to be in trouble, right, Jackson? Right. So I hope that, basically, how do I say this? It basically gets you into the right picture right now. So how many opportunities for good picking for upswing right now? Can you see? Right, my portfolio is already fully allocated. Yeah. Okay. Now I have this portfolio right. Oh. Yep. Right. We have this portfolio right now that is, 100,000 when it started, right? And then we made, about 17,000 right now. Right. Okay. About 17,000 right now. Okay. Now, so that puts the total portfolio cash at about 117. Okay. And today, based on today, we are allocating about 90,000. Right. So we have allocated 90,000. So we are about 90% exposed. Right. So I'm good enough with that. So I don't force myself, right, to decide, hey, how many good opportunities? No, you let the trade comes to you. Because if there isn't a great trade to be taking, why are you taking it? Are you trying to lose money? Of course not, right? Now, so you have to understand, okay, that at times when the market frustrates you, you have to exercise patience. Yeah, okay, because it is always the impatient ones, right, that get slaughtered in this marketplace. Yeah, okay, so don't put yourself on the chopping board. Yeah. Okay. All right. Now, double-edged sword. Okay. I hope it's not you, Andy. All right. Okay. Because sometimes when you leave comments, you have to be very, very careful. Okay. It's double-edged sword. Okay. If you don't know what you're doing, right, it can lead people to think, hey, Terence, with the lower requirement for every trade, that means I can trade a lot more. But doesn't that end up with the same picture? Yeah. Right. If you end up trading more, that means you have you're taking on bigger risk. Yeah. Okay. All right. So it doesn't solve the problem, right? The first question is to educate yourself and know exactly how the system works, where all the downsides are. All right. So you know where the pitfalls are and to avoid them. Yeah. Okay. Thank you, Daniel. Are you trying to score cookie points every time, Daniel? But thank you. All right. Now, Joanne, okay, now the answer is no. Okay, but once again, this is the only strategy that I'm covering in here. All right, so if you want to explore other strategies, all right, it will be great. Okay, if you decide, and jump on board or come with us via our trading membership or via 24R, okay, which gives you a bite-sized entry into being an option seller. Yeah, okay, either one of them should serve you well, all right, starting out over here. Okay, now I promised Ryan, so I'm going to go to Ryan's question, right? And then for the rest, we'll come back next week, yeah? Right, Ryan, would you consider picking a strike at or just above the current market price to pick up more premiums? Ryan, didn't I do that, right, with CPB? I just did that with CPB. Didn't you see that? All right, CPB is trading at 43. What did I sell? I sell a 43 put. All right, Ryan? That's what I did. Why? Number one, again, what's your objective? Right? It has to always start from there. What's your objective? Right? Are you a willing owner to buy the shares? If you are, right, if you have allocated the capital, right, then you can afford to choose a strike that is near where the stock is because you're confident that it's going to go up. Can you see what I mean? Yeah. Okay. But if you're not confident, okay, or if you short, that's not the right word. If you are short of the capital that you need, okay, for example, let's say, like what some of them suggested, if you did a put spread instead, then you might want a margin for error, right? So you might want to choose a put strike that's further apart. Can you see what I mean now? Yeah, okay, so it's always about your returns, right, versus the risk, okay, and versus the investment required. Yeah, okay, now, so it's the big picture over here, right? Yeah, okay, so it's what you're doing, right, versus what's the need, okay, and versus what's the return that it's giving you, right, and how much safety you can get out of it. Because any investment is a great investment as long as it achieves the returns that you're happy with. Can you see? All right, but once you achieve the returns that you're happy with, if I give you two choices, a safer trade versus a riskier trade, which one makes a better choice now, Ryan? Yeah. Okay. All right. I think you already got a picture because you are one of our community members over here, right? Okay. Now, Jimmy, all right, send our team an email. Okay. All right. They will get you a reply. Okay, and you'll get started in no time. Jimmy, get in touch with Sam. I think that's a better answer for you, Jimmy. Okay, all right. Now, thank you very much once again for joining me on Friday night over here. I'm going to relieve all of you right now. Okay, and I hope you join me once again, right, next Friday. Okay, everyone. All right, thank you very much once again. This is Terence Tan. Right, I really enjoy doing this Friday live sessions with all of you. Right, and I'll catch all of you next Friday live again. All right, now, so once again, one last opportunity. All right, if you are late, okay, this is the buzzer beater right now. Okay, click on the like. Okay, share it to the public, right? And you will qualify, okay, to be one number, okay, in our hot and fresh giveaway, right? That ends on 16 September. Okay, now, so thank you very much for joining me once again, everyone. And I'll see all of you next Friday, okay? All right, I'll see all of you next Friday. Thank you very much. And bye-bye for now.